Good morning and welcome to HYCM Insight with myself, Giles Coughlin, a Chief Currency Analyst. Now, the market move for the session ahead is as follows. One of the key questions for US investors right now is if US growth has started to show signs of slowing. Has that happened? Furthermore, are the signs of growth slowing so serious that US stocks are poised to potentially take another leg lower? Now, ultimately, that question will be answered as more and more US economic data comes in over the coming days and weeks. But it's worth looking at stocks that tend to do well as interest rates rise, with the Fed poised to potentially hike rates up to 9 times this year, according to interest rate probability markets. You can see between March the 30th and April the 28th, over the last 14 years, American Express has risen a total of 11 times with an average return of over 4.5%. So will American Express rise again this year, or will slowing US growth harm the outlook for financial stocks? Remember, HYCM clients can access this SeasonX product in order to analyze over 25,000 currency pairs, indices, commodities, as well as individual stocks for themselves. You simply click into this search bar and you can search a whole range of different instruments and quickly call up their seasonal patterns. Major trade risks. The major outlook risk for this is that if US growth does show signs of slowing, but the Fed is still having to hike rates to contain high inflation, that results in a stagflationary environment that tends to give financial stocks like American Express a poor outlook and would potentially invalidate this seasonal outlook.